Ford has just dropped a huge announcement shaking up the entire car industry. In a move nobody expected, they're about to change the game completely. This bold decision is set to reshape the future of cars, and it's something we've never seen before. Stick with us until the end to find out what Ford has planned, and don't forget to subscribe to our channel for more updates. Ford has recently announced a major restructuring plan that will cut around 4,000 jobs across Europe, marking a significant shift in the company's strategy. This move isn't just about reducing costs, but reflects a broader reevaluation of Ford's approach to the automotive market. The company is grappling with several challenges, including weak demand for electric vehicles, EVs, rising competition from Chinese EV manufacturers, and an uncertain economic environment. A key part of this restructuring is Ford's decision to cancel a $2 billion electric SUV project, initially meant to compete with models like the Kia EV9 and Volvo EX90. Despite the potential, Ford deemed it financially unviable due to high development costs and concerns over the return on investment. This has raised questions about Ford's long-term commitment to electrification, especially as it had positioned itself as a major player in the EV market. Additionally, Ford has delayed the launch of the successor to its popular F-150 Lightning electric pickup truck. Sales have been slower than expected, and high production costs, along with unsold inventory, forced the company to rethink its strategy. These decisions signal that Ford is recalibrating its approach, balancing its electrification goals with the realities of consumer demand and increased competition. The restructuring is not just about job cuts, but a critical step in adjusting Ford's direction in a challenging market. In an unexpected move, Ford has decided to focus more on hybrid vehicles instead of fully electric ones. Hybrids, which combine traditional internal combustion engines with electric technology, offer a middle ground for consumers hesitant to fully embrace electric vehicles, EVs. Despite the automotive industry's push toward electrification, many drivers remain cautious about EVs due to concerns over range, charging infrastructure, and high upfront costs. Ford's decision recognizes shifting consumer behavior. While interest in EVs is growing, many potential buyers are still worried about range anxiety and a lack of charging stations. By emphasizing hybrids, Ford provides a solution that balances reducing emissions while maintaining the convenience of gasoline-powered vehicles. This strategy targets consumers who want efficiency without fully giving up fossil fuels. The move is also a practical response to Ford's financial struggles, as its electric vehicle division lost $2 billion in the first half of 2024. By focusing on hybrids, which are cheaper to produce, Ford aims to stabilize finances and improve profit margins. This strategy could also serve as a stepping stone, gradually introducing consumers to full electrification while addressing current market concerns. Ford is facing significant financial challenges within its electric vehicle (EV) division, projecting a $5 billion loss by the end of 2024 due to underperforming sales. Initially optimistic about models like the F-150 Lightning and the Mustang Mach-E, consumer demand has not met expectations. High prices and consumer reluctance to fully embrace EVs have left Ford with unsold inventory, straining finances. The company is also struggling to compete with Chinese EV makers like BYD and NIO, which produce vehicles with advanced battery technology at lower costs. As global EV adoption increases, these competitors are gaining ground, forcing Ford to rethink its strategy and cut costs to remain competitive. Another obstacle is the rapid depreciation of EVs, with models like the Mustang Mach-E losing up to 50% of their value within a year. This has caused consumer hesitation and created problems for dealerships burdened with unsold vehicles. To address this, Ford has been forced to offer deep discounts, further eroding profit margins. In response, Ford is shifting its focus to hybrid models, offering a more affordable, practical option to maintain profitability while preparing for the long-term shift to full electrification. Ford's restructuring has had a major impact on its dealership network, which has long been a key part of its sales strategy. Dealerships across Europe and North America invested heavily in EV infrastructure, including charging stations, upgraded tools, and staff training. However, with EV sales falling below expectations, these investments have put many dealerships in a tough financial spot. Smaller dealerships are especially struggling to cover the costs, leading to more closures or liquidations. Even larger dealerships are facing challenges, stuck with unsold EV inventory that they must discount heavily to sell. The overproduction of EVs during the EV boom has caused an inventory glut, creating significant operational and financial strain for dealerships. Ford's shift toward hybrid vehicles reflects a broader trend in the industry. Many automakers, including GM and Stellantis, are reassessing their EV strategies and slowing down the rollout. While GM has taken a more cautious approach, some companies are exploring direct-to-consumer sales models, which could bypass dealerships altogether. This shift is creating tension between manufacturers and dealerships as they navigate new sales models while maintaining customer services. Ford's focus on hybrids acknowledges the slower-than-expected EV adoption, offering a more gradual transition for consumers and potentially shaping future industry strategies. Ford is facing significant struggles in its transition to electric vehicles, EVs, with models like the Mustang Mach-E and F-150 Lightning priced upwards of $90,000 for high-end trims, encountering resistance from consumers due to high prices and a lack of clear incentives. This has led to a backlog of unsold inventory at dealerships, further straining Ford's financial position. Dealers are also feeling the pressure, especially smaller ones with fewer resources. Floor plan financing, interest payments on unsold stock, has become a major burden, particularly as investments in charging stations and staff training made to accommodate the EV market are now seen as liabilities due to lack of demand. Consumer skepticism about the reliability and long-term value of EVs is another obstacle. Many buyers are wary of steep depreciation, as some models, including the F-150 Lightning and Mustang Mach-E, have lost significant value in just the first year. This is causing hesitation among potential buyers. Additionally, the pandemic-era price hikes by some dealerships have damaged consumer trust. During the global supply chain shortages, dealers marked up high-demand vehicles, leading to customer dissatisfaction. As the market normalizes, dealerships are struggling to regain that trust, a key factor in ensuring long-term sales success for Ford and its electric vehicle offerings. Ford is shifting its focus away from purely electric vehicles, EVs, and embracing hybrid vehicles as part of a broader strategy to meet both current consumer preferences and future electrification goals. Hybrids offer an easier entry point for those wanting to reduce their carbon footprint without fully committing to an EV. This move is particularly relevant in markets where EV adoption has been slower, offering a blend of traditional combustion engines and electric power. Additionally, Ford is exploring a direct-to-consumer sales model, particularly for EVs, bypassing traditional dealerships and allowing customers to purchase vehicles online. This model is gaining traction, especially among tech-savvy buyers, offering convenience and ease. However, it has sparked tension with Ford's dealership network, which fears losing its role in the car buying process. The shift to online sales could also alienate customers who prefer the traditional dealership experience, potentially straining Ford's long-term relationship with its dealers. Ford's shift to hybrid models and restructuring offers both opportunities and challenges for consumers. The oversupply of electric vehicles, EVs, at dealerships, such as the Mustang Mach-E and F-150 Lightning, has led to significant discounts, allowing buyers to purchase these models at much lower prices than expected. However, for those seeking traditional gasoline-powered vehicles, prices remain high, especially for fully loaded trims. Rising interest rates are also pushing up monthly payments, making it harder for many to afford these cars. Ford's emphasis on hybrids could provide more affordable options for consumers looking for better fuel efficiency, without fully committing to electric vehicles. This strategy targets a broader market, including those who want to reduce emissions but aren't ready to go fully electric. Additionally, the trend toward online and direct-to-consumer sales may attract tech-savvy buyers, but could create challenges for those who prefer in-person dealership experiences. Ford's strategic shift highlights the broader challenges the automotive industry faces in transitioning to electrification. The rapid growth of EV technology, combined with fierce competition from Chinese manufacturers, is pushing traditional automakers to rethink their strategies. Ford's focus on hybrids underscores the fact that EV adoption is progressing slower than expected. forcing manufacturers to adjust their timelines for full electrification. In addition, Ford faces external pressures, such as potential tariffs on vehicles made in Mexico, which could raise the cost of its EV models. The uncertainty around EV subsidies and tax credits further complicates the situation, making it harder for Ford to balance short-term financial challenges with long-term investments in electric vehicles. Ford's push for domestic battery production aims to reduce reliance on foreign suppliers and take advantage of US tax incentives. However, with these plants still under construction, Ford must carefully manage short-term financial hurdles while preparing for the future of electrification. Hence, Ford's bold restructuring comes as a response to a perfect storm of financial challenges, competition, and changing consumer preferences. By cutting jobs, canceling major projects, and shifting focus to hybrids, Ford is trying to stabilize its finances and adapt to the evolving market. While these moves carry risks, they show Ford's commitment to navigating the fast-changing automotive landscape. Whether this strategy will secure Ford's long-term success is still uncertain, but it's already making a huge impact on the industry. That's it for today. What do you think? Is Ford's approach a game changer or too risky? Share your thoughts in the comments. Stay tuned for more updates, and if you enjoyed this video, don't forget to like, share, and subscribe. More exciting news is coming soon.